So we pay 0.5% commission on the mortgage amount. So in simple words, for $1 million, 0.5% is how much? Speak up.
5,000.
Yes, it's money. Come on, you guys are pretty excited. It's morning. Your voice should be louder. It's just the start of the day. So for $1 million is 5,000 plus HST. So the way it comes is every time we close a deal, that after 2 weeks of closing the deal, the commission check goes to your brokerage's trust account. Okay, and it will give all the details. Who was the real estate agent, which property, and which company does it pertain to. And then after REIT compliance, the commission is then forwarded to the realtor, different retailer. Okay, so Yusuf talked about how he forwards the commission, but the corporate office will pay every agent 0.5% plus HST. Okay, this adds as a part of income. So in simple words, for every $1 million, you're making $5,000 per month. So $2 million, I expect everybody to visit here selling houses. So let's presume $2 million a month at mortgage national bank cuts you a paycheck of $10,000 a month. So how much is it for a year? How much is it for a year? Tell me. So for 2 million, it's $10,000. Okay, so how much gas or fuel you need to burn showing your buyers' houses to make 100,000 in commissions? Tell me. And how much headache and how much showings and how much runaround you have to do with the buyers to make 100,000 in commissions? I do my real estate education and I studied. I know it is not easy. You guys put a lot of sweat, energy, and time. And I want you to take advantage of the money National Bank is putting on the table to bring business to National Bank. So yes, you can the client with the mortgage specialist. Okay. We go over the whole approval process with the client. We talk the client, handhold the client the whole process. Because we take pride in preference and we want to ensure that we do a smooth closing for your clients. Right? So at the end of closing, you get paid. That's it. Now we have a very educated conversation. We will not every client we can mortgage, you know that, right? I work for a bank. I am unfortunately not a mortgage broker. So whatever parameters fit in the bank policy, I will try to explore all the parameters to see which program this client is the best fit for. If the deal works during the pre-approval process, I always communicate with the agents on a timely basis to let them know where we stand on the deal. This way, they are all in the loop, what's going on. And then we want to ensure that we do a smooth closing. Can I do all the deals? Of course not. I cannot do all the deals. So, but the point is to take an opportunity to refer to see if that could be done. Not only our job is here to do mortgages, but our job is here also to educate the client. Sometimes we deal with different types of clients like newcomers, deal with people who don't know how to structure and what important things they should keep in mind before buying the house. They should know if down payment is coming from overseas, what are the key factors they should be prepared with. Gifted down payments from parents and whatnot, what are the key elements? You don't want the client to get caught by surprise, they're not ready. So our job is also to educate the client properly. So our key. Salman, what is an assignment? Yes, right. Yeah, yeah.
So I can then do sell that to you even before I see or want to take or whatever that I think known as. However, you got to explain to us how do we go about with the capital gain and the capital.
Okay, I'll come to that. So let's start from the fundamental. Assignment is applicable to pre-construction projects, right? That means new builds. So, and I have a feel that we are going to be getting a lot of assignments in 2023. Because people who booked with the builders 2 or 3 years ago, they probably did not go through a proper mortgage approval process. They just got a pre-approval letter, gave it to the builder, and now they are stuck. When the rates are high, they cannot get the mortgage approval. This will trigger the assignment market a lot, I can tell you right away. They won't be able to close, or there will be one set of buyers who only bought the properties for investment purpose and they want to sell it before closing so that they can make good money out of the property, right? Now, there are a lot of banks, they look at assignment in different ways. Some banks, they will look at the original price on the builder purchase agreement, APS, right? So the builder sold the buyer, let's say, a property for $1 million. So, but the assigner sold the property to the new buyer for, let's say, 1.2 million, correct? Some banks, they will do lending on the original price, which is 1 million, right? However, National Bank, we take the purchase assigned price. That means 1.2 million. Not every bank allows that. So that is a plus point. So whatever price is assigned by the assigner to the new buyer, that is the price we will consider when it comes to assignments, as long as they qualify. That is first positive. Sorry, yes. Now the second aspect is, based on my experience, a lot of new constructions which are under $1 million, appraisal is automatically waived. Okay. Why? Because if somebody booked a house, let's say in 2017, 2018, that property under pre-construction has appreciated well. So what they do is the bank runs the property value through MLE system first. If the MLE system waives, and based on my experience, I've done a lot of new constructions in the last 1 year, under $1 million, it is waiving it. Anything which is very high in price, like let's say 1.3, 1.4, they may require an appraisal, and also depends on the location of the property. So, but under 1 million, mostly it is waived. It passes through the MLE system, so the client saves appraisal fee on that, right? The bank always takes the lower value, either the appraised value or the assigned price. So if the appraisal value is lower, then of course bank will lend on the lower value. That we tell the client ahead of time when we are doing the mortgage, so that the client is not, getting a surprise. What if they don't have funds to put extra down payment? They have to cover the difference in extra down payment. Do you have any questions on assignment?
What do you do, for example, in a where, okay, everything goes season, and you approve the home, everything is good, everything is good. What happens at the time of the developer increases the prices? Because it has happened in certain instances that looking for $500 million, you know what, at the time of occupancy, the developer is demanding more, and the prices go up. They qualify or because the down payment is still the same, the down payment hasn't gone up.
So this is all about doing the homework. If I am the buyer, I will run the APS through a lawyer, because these clauses are in the APS. I have not seen yet like that. I have not seen like that, Salman, yet. Most of the pre-construction prices, they don't jack up the price at the time of occupancy. I have not seen that yet. So the bank doesn't care. So how much do they jack up by? Is there a percentage or is it an amount? What is it? Yeah, so I have not come across, but that if they have done a revised purchase price, then we can modify it. If there is no amended purchase price, we will not pay. It has to be a part of amended purchase price then. If that is the case, yes, bank will look into it.
So, and then of course, let's say the down payment requirement was 20% by the bank, you got to make sure that that ratio is maintained.
Exactly. See, it is all about qualification. Sometimes people do upgrades, but sometimes they pay cash for upgrades, right? It doesn't affect your new revised purchase price. Bank only looks at what is your purchase price. Whether it is an amended purchase price or whatever it is, it will always take the purchase price. If the builder doesn't amend it, then the client has to put from their pocket. The bank will not include that.
But if the builder does amend it and they get a, amended purchase.
Then we will approve it. Yes, we will do it because it makes sense, right? Logically, if there is an amendment on the price, as long as the client qualifies, of course, we'll do it.
So there is normally.
Yeah, 100,000 is a lot, right? So are we good on assignments? We are good on assignments, right? All right. So now this is a very hot topic, newcomer program. I don't know how many of you deal a lot with newcomers. Can anybody tell me the definition of newcomer? Joseph? I know you're busy on the phone. I want to be paid attention to. I'm here to do a presentation.
This probably have very much to do with working with you, so.
I like attentive audience.
Newcomer,
What is the definition of newcomer?
okay.
Do you deal with that?
He's a commercial guy.
Okay.
I make it easier for you.
Okay.
I don't really need that much.
Okay. Go ahead, Joseph. I can hear you.
I used to drag, like give order to almost 10,000 soldiers. Don't mind. Don't worry about it. When it comes to since I'm a commercial guy, so newcomer, my definition is someone that never experienced investing in commercial.
Joseph, have you all?
Come on, maybe the pool test.
Joseph, have you always dealt with commercial clients? You have never dealt with residential clients? Since you are in real estate, like throughout? Okay. Yeah, so let me tell you something, Joseph. I know commercial is big bucks, but sometimes it is good to know the other side because you never know if you have some, because all the commercial guys have residential properties too, right? So that is an opportunity for you to dip into it. You don't have to spend too much time in it. You can just refer me and I'll do all the work, right? So what is a newcomer? Bob is already paying attention. He's next on my question list.
I was just about to start looking at myself.
So you team with Bob on the residential side, Joseph?
We work together, so.
Awesome. That's good. That's good. That's good. That's good. It's good to delegate. Some parts you do and some parts Bob does. Awesome. So newcomer basically is anybody who is in Canada less than 5 years. How does bank determine that this client is a newcomer? You know, if I come to the bank as a buyer and say I'm a newcomer, they won't believe me. So the way they determine is by your credit bureau. So, you know, when a bank does a credit check on a mortgage, it will say credit report start dates. If the start date is less than 5 years, automatically that client is a newcomer. Now, that is one criteria of a definition of newcomer. In Canada, less than 5 years. has limited credit history or no credit history, right? That is the second part of newcomer program. Now, newcomers actually are classified under two types of newcomers. One is called temporary residents and one are called permanent residents. A temporary resident is somebody who's in Canada with a work permit only. His social insurance number will start with a 9. That is how you identify that he is temporary resident. A permanent resident is somebody who has a PR card, permanent resident card, but their SIN number does not start with 9. So this is how we distinguish the two categories of newcomers. Most of the banks don't deal with temporary resident newcomers. They don't, because as soon as they see your SIN number starting with 9 and you have a work permit, they will not do a mortgage application. We deal with both types of clients. So it doesn't matter. And we take temporary resident newcomer and we take permanent resident newcomer. So that's how we classify them. Now, newcomers can qualify two ways. One way is like a normal person with 20% down payment or with less than 20% down payment, they can go through CMHC insurance or Sagen, which was Genworth before, or Canada Guarantee, CGI. So we have 3 insurers on board at National Bank. One is Canada Guarantee, one is Genworth, which is now called Sagen, and third is CMHC. So one category is if they are putting minimum 5% down payment, they qualify with income, they have limited credit, they will qualify under newcomer program. Then there is another category where they do not have the 5% down payment. They have a job, but the income is not great to qualify. However, they have 35% down payment. They have 1 year of principal, interest, and property tax in the account. They will qualify under conventional as long as they are putting 35% down. So that is the second type the bank will qualify these type of clients. That means you're putting a bigger down payment, basically. So in that, they don't consider income, but they have to be working. You cannot have a client who's putting 35% down payment, but is unemployed. We cannot consider that. Even though they make 10,000 a year or 20,000 a year, they have to be working and they have to have 1 year of PIT, which is principal, interest, and property tax saved in their account. 3 months is the minimum job requirement. They could be on probation, we will still accept it. Yes. Who takes it? I know you're joking. Yes, Rudy, you have a question? 35% could be gifted. Yeah, it can be gifted. Because a lot of people who come here, they get some money from parents from overseas. We do take overseas down payment, but as per AML law, which is anti-money laundering rule, we have to track the 90-day source of funds from overseas too. So, but it could be gifted too. And the gift has to come from immediate family, father, mother, brother, sister, not neighbor, friend, uncle, aunt.
So in consideration.
No. Isn't that good? Fantastic. There you go.
You said, the first year of, tax.
1 year PIT they should have. Principal, interest, and property tax. So if somebody has a mortgage, is looking for a mortgage for 500K. So whatever the monthly payment comes to you, times that by 12, plus whatever is the property tax, they should have that in their Canadian bank account. Okay, they should not have bankruptcies, consumer proposals. We don't entertain any clients with bad credit, no matter what. The other thing is in newcomers program, there is a property restriction. People are becoming very smart these days. They can say a lot of stories they want. Okay, a newcomer should not have more than 1 property. We don't encourage newcomer program for refinance. Newcomer is only applicable for purchase. Purchase only, no refinance, not more than 1 property. They could have sold their existing home and buying another under newcomer as long as they are still within the 5-year time frame in Canada. That is okay. And with newcomer program, they have a choice to take 65% money in the form of a HELOC, home equity line of credit, or a mortgage, if they want. That is also a plus point. Because these days, a lot of people like to take HELOCs. Yes, go ahead, Joseph.
Yes, I have a question.
I'm so happy you asked me a question. I love questions. Awesome. I'm even happier.
Okay. So
So, pass.
You're about to sing now?
So, I would like to go a little bit backwards, talking about the beacon number.
Beacon score, yes.
Yes. This credit number, and you say that no bankruptcy. Before I ask a little bit more questions about the law here. What happened if this newcomers did have we call bankruptcy records back in its original country. For example, he's coming from Japan, or Singapore or UK, whatever you name it, right? And what happened? Can you trace back that if they
See, that's a good question. Joseph, see, there are a lot of people coming, let's say, from US. If there is a person moving from US to Canada as a PR or on a work permit, we can get a US credit bureau. But somebody coming from India, China, Japan, here and there, we don't have access to their international credit bureau. But what we will do instead of that is we are going to ask them to provide me 12 months of rent payments and a letter from a landlord indicating how is his credit history. We will ask from local, because we cannot verify from Japan, right? Then we will ask them to provide us 12-month history of, let's say, phone bill payments, hydrant, rental record, because that is what is going to establish what kind of repayer he is. Okay, if I declared bankruptcy in Japan, I better shut up and not tell the bank that I, declared bankruptcy in Japan. Well, don't tell me that I'm telling you this, but I'm telling you this.
Further question is talking about the bankruptcy.
Yeah,
We all know that in Canada, there's actually
a rule.
when it comes to we call insolvency, there's actually two different levels. One we call consumer proposal, right?
Yes, yes.
And the other is bankruptcy. Bankruptcy definitely is worse, right?
Yeah.
Once you file bankruptcy,
They're both worse.
yeah, not worse.
They're both worse.
Oh, they're worse. That's what.
I'll tell you the difference.
That's my questions. What
So
difference?
consumer proposal and bankruptcy are both a stigma on client's credit bureau. Okay, they don't talk good about the client both ways. We cannot justify one is better than another. The only difference is that in bankruptcy, if I am not able to pay 100,000 in credit cards or debts, I just lift my hands up and say, hey, I cannot pay. Then you're bankrupt. You just do not want to take the accountability of making that payment, and you just declare bankruptcy. That stays on your record for 7 years. So for rule for that is it has to be discharged, and you have to reestablish the credit for minimum 2 years with minimum 2 trade lines to come in business again.
All the debt being paid off.
Yes. Now, consumer proposal means that the client says he pleads to the court that, sorry, I'm not able to pay all this at once. However, you give me a better payment arrangement and I will pay this over a span of time in small amounts. So there is an arrangement between the client and the court that I will take it as a consumer proposal. I take the responsibility of paying, which talks something good about the client's character, but it is still a stigma on the client's credit bureau. For bank, we will not take it. Consumer proposal and bankruptcy have one rule only. The rule is they have to clear everything, reestablish credit for minimum 2 years, and then go to bank for lending. Because on the report, it will say discharge, bankruptcy discharge this year and this date. And then we have to see, has he reestablished after that date? And it applies to both consumer proposal as well as bankruptcy. Yeah.
So in essence, actually, there's no benefit to the client, and actually, what more do you
Yeah, yeah. Well, it talks about the character of the client. So there are 5 C's of credit. Character is one of them. So it tells that this client is not somebody who escapes and creates a blunder and runs away. They tell that he takes responsibility for, so he had a bankruptcy for whatever. Sometimes there are unforeseen circumstances and people get into situations they cannot control. But as long as they take the accountability, that also talks about the nature of the client, right? So, but having said that, from lending perspective, the bank doesn't look at it in a nice way.
This question is probably not really very much related to what you just said.
Yeah.
But is that the reason when Canadians are reaching our age, mostly they pay cash?
No,
Because what Canadians are paid to have been paid and have been working with Nonica to pay cash, because Nonica kind of, she gives that 0.5% for the each referral, so you make more money. So by this case, you should have referred at least 50.
see, I tell you one thing, Joseph, let me make your life easy. You make 100,000 with me every year, you can retire after 5 years.
That's the great thing.
Simple, it's all math.
Wait, 100,000 is for you or for me?
You make 100,000 from me every year. And you retire after 5 years, I'll set you up with an investment plan and say, Joseph, you have so much money from National Bank, you're good to retire. There you go. Yes, Rudy.
So this might not apply to the first time buyer, but if someone reestablishes credit after bankruptcy, you consider them?
2 years minimum they have to reestablish with 2 trade lines. But for newcomer, they will not take it. They will take it on a regular conventional deal. Because you have to understand, these are specialized programs. Equity program, newcomer program, self-employed program. Whenever there is a label to a program, they become specialized programs. In these type of programs, there is no room for exception. That means their credit has to be immaculate, spotless. Yes, if it is a normal conventional deal and, then they will look at it that they have reestablished and all that. But in this, even if you have reestablished, they will not look at it. Simple. 2 trade line means 2 credit facility. Could be 1 credit card, 1 line of credit, could be 2 credit cards. So that is what trade line means. Trade line means something that they use in credit. Okay. So also in newcomer, the bank has revised now the maximum mortgage purchase price. Before it used to be 1 million. So under newcomer program, you couldn't go buy property over 1 million to qualify under this program. Now they have bumped it up for GTA, I think, to 1.5 now. 1.5 because now the prices have gone up so much. So they want it to be realistic with the current market prices. Yes.
There is a statement for non-residents.
We do not do, unfortunately, non-resident program, National Bank does not do. Yeah.
Doesn't like the amount of the income.
If they're putting 35% down, that if they put 35% down and they have 1 year of mortgage payment and property tax, they don't depend on the income to qualify the deal.
So they,
But they have to be working though.
but it's not intending that working around.
Yes, no. Okay. All right, guys. Yeah, so I'll move now to so this is what I wanted to talk, and this is a very important topic. This is becoming very popular. Do you know co-borrower not on title? We take a lot of pride because National Bank does this a lot, and this is for taxation point of view. From capital gains point of view, why this is very important. Sometimes parents, they want to help their children to buy properties. They want to be on the mortgage as guarantor, but they don't want to go on the title of the property. Sometimes the husband is in a high tax bracket or he's self-employed. He wants to buy the house under wife's name and be just a guarantor on the mortgage, but not to go on the title because of capital gains and all those taxation implications. So National Bank allows that. So for us, we can pick and choose who you want to go on title. Both the mortgage co-borrowers don't have to go on title. So you can pick and choose anyone to go on title.
This happens very often.
Yeah, but in a residential, not every bank allows that. We allow that. Yes. In commercial, you probably do a lot of titles under holding companies, right? So on our side, we also do that. We do residential mortgages under holding companies where holding companies on the title and the directors of the company are on the mortgage application. So we do that. That comes under the residential sector.
I have one case, fertilizer.
I love that. See, Joseph, now when you start paying attention to me, you already have one prospect.
Because I want to reach the goal so I can retire. You can help me then.
I want everybody to make that goal, not just Joseph, right, Bob? You have to push him. You have to push each other,
Yes, that's right.
right? You are very quiet. Do you have any questions for me? Okay, good. Sorry, I didn't catch your name. Lucy, nice to meet you. Okay, that's good. So are we okay with this? Like, this is pretty straightforward, like, co-borrower not on title. It's very important, especially, for different reasons for everybody. Parents helping children or husband in high income and incorporated. He doesn't want to go on title for tax implications, wants to put a wife only on the title. And then somebody could have a lot of properties, and from taxation point of view, for saving on capital gains and stuff, they want to pick and choose who goes on title for how many properties, right? So this is very, very popular.
And it's also like, it's voting on civil,
Yeah.
and we're not on track.
It's on.
So we're not on track. So let's say that impacts my credit bureau as well. Because then it won't reflect, let's say if I'm on title, the mortgage will reflect, but the mortgage won't, some banks do report it, some banks don't. Let's say if it's a HELOC, right? If it's a HELOC and I'm on title, it'll reflect on my first Equifax. And if I want to go buy any other property, let's say for myself or my second property, that'll be taken part of the qualification process, because then I have a mortgage to pay or a HELOC to pay.
See, Salman, you have to remember, title has nothing to do with credit bureau.
Doesn't it?
No, title has to do with who is on the mortgage. Credit bureau has to do with who is on the mortgage.
Right, but will the mortgage reflected my, let's say, HELOC?
Well, of course it will be, because you're going as a guarantor. If you are taking responsibility, there's a reason you are coming on the mortgage, right?
If I give like as a guarantee, right?
Yeah.
As a HELOC,
Doesn't matter any product, yeah.
right? It's a, because mortgage, the Equifax mortgages are not important.
Or they are reported.
90% I've seen that it's not there.
They are most of the time there. Before, there were some banks which never used to report a co-borrower guarantor, but now everybody is reporting. It is actually a risk from the risk management point of view for the bank. It is dangerous because, especially for investors, there are people who have a lot of properties and they are going on guarantors on a lot of properties. If they are not correctly reflected on the credit bureau, it creates a lending risk for the bank, because always remember, every bank seals, there is a cap. So for example, Salman, if you are a high net worth client, let's say for Royal Bank,
So I'll give you an example.
RBC has a limit as to how much maximum they can lend you. So after a certain point, they will say, no matter how high net worth client you are, that is a risk cap for every bank.
No one is hearing this,
Yeah.
but I'm telling you, my mortgage is not reported on my account.
Which bank are you dealing with?
If I tell you everything, then you know what?
See, you don't have to tell me, but I'm just, this is a knowledge sharing session. I mean, there is no harm going to come out of that. What I'm trying.
You never know. Joseph is here. You never know what he's doing.
Nothing to do with this.
So what I'm trying to say, that a lot of private lenders will not show up on the credit bureau. But don't be fooled, because when an underwriter writes the deal, they do a title search under the name of the client. So when they do a title search under a name of client, if the client did not disclose the property, you are in big trouble because it comes to disclosure. So me, I'm very thorough with my clients. It is always good to go with the clear picture and be transparent with the bank. At least you know you will not have a surprise later on. You don't want to portray a wrong image because it is all about a client's image too. So I always tell the clients to disclose every property, whether it is reported on the credit bureau or it is not. Let the bank decide it. But because if you think that it is not reported, oh, I'm going to get more money, you are making a big mistake because the underwriters run a title search under the name. It will disclose because anybody who is registered with, no, doesn't matter where, all their properties are listed on their report right away. Even I cannot see it, but they can see it. They will come back to me with questions. Nonica, can you go back to the client and ask, they are showing this property, is it still there or is it sold? So we cannot get away from that, what I'm trying to say, Salman.
I know, we fully understand.
Yeah.
Experience that a lot there,
Yeah,
but fortunately or unfortunately, sometimes, the mortgage is just a mortgage, not a HELOC. HELOCs are normally reported. Mortgages, I've seen that, not being reported yet. That kind of, gives the wrong picture. Like whenever I'm looking at something as well. So also mortgages are, and then the owner property, okay, how much is the mortgage? Let me the mortgage statement. All that kind of, they need all that.
yes,
So it doesn't reflect in the,
report, yeah,
but then if they are, like in your case, if they're not on title yet to co-caller, they say, you know what, no, I'm not on title. You know what, it's not my mortgage, but no, you still give the personal guarantee, you still give your commitment, you are still liable to pay those. In case of the primary mortgage holder defaults.
yes. See, the thing is, you cannot win everywhere. When somebody comes on a mortgage application as a guarantor, they know what they are signing for. It is not given to them as a surprise, but they have to decide whether signing on this mortgage as a co-borrower or guarantor is a high priority at the moment or not. Having said that, sometimes the clients are in new jobs, let's say your children, and maybe 5 years down the road, their income will go up. You can always remove the guarantor from the mortgage later on, Salman. So it is not that, oh, it is the end of it, now I'm on it, I'm stuck, I cannot get out. So there is always a loophole. So the loophole is, let's say a few years down the road, the guarantor says, Nonica, I want to remove my name from the mortgage. How can I do that? Now, whoever is going to be on the mortgage left after the guarantor, either they qualify on their own or we can also replace the guarantor. So let's say you say, Nonica, I want to get out. Instead, I want to put my wife in there as a guarantor. We can always review that. So there is always a solution, but you have to let us know. So this is not like an irreversible change. We cannot change it, right? We can do that. Yes, Said. Said is paying attention. Trust me, I can tell.
Monica,
Yes.
my question is about B. Okay, so when that happened, will this also show on the, for example, all the credit reports?
What will show?
For example, if I become the guarantor or indemnify to my son's mortgage.
It will show that you are a co-borrower guarantor. It will say the word guarantor. It will say you are not the property owner, but you are a guarantor for the son. We can explain that. Yes.
Oh, okay.
Yeah. So we can classify that. We can distinguish a title owner with the guarantor. So when we mitigate your application, we can let the underwriter know that Joseph is here in the capacity of a guarantor. Okay. However, his son is the one who is the main income driver paying for the mortgage.
Would that be also be considered in the future by the bank if this B want to get a mortgage from the bank?
Yeah, of course. Of course.
So could you give any scenarios that like worst case and the best case?
See, worst case is when you don't qualify. So let's say you have co-signed for your son, for example, for a $1 million mortgage. Now that $1 million mortgage will show up on your credit report as 100% liability for you, right? 100%. However, on the credit bureau, it will show that you are a co-borrower as a guarantor. Okay, so when we go back and explain to the bank that now Joseph is buying a property of his own, however, that $1 million is causing a strain on your borrowing capacity, we can mitigate the risk by showing that you are co-borrower for, let's say, your son, and the son makes already an income of 200,000. So it is the son's bank account. So we can provide that extra proof that he is actually the one making the payment. So that will give you a leeway for exception. They will give, but we have to explain and mitigate that risk. They are not just gonna close their eyes and approve more. We have to explain.
I have 3 kids.
I know. This is where you feel the pain when you have to help. Yes.
That's why we need to refer more clients to.
That's
Nonica.
why. Bob is smart, he got it. That is why you have to refer more clients to make more income so that you can use that income as a down payment for your children, a bigger down payment.
You could always use leverage, so I got it.
You got it. Are we good? You're all good on that? So I know I did not tell you a lot about myself. I just started and I got passionate about because I love what I do. So I start talking about the programs right away because I don't want you to get bored. So I am Nonica Sarin. I am actually a mortgage specialist with National Bank of Canada. Now I've finished over 10 years with National Bank. Before that, I was 10 years with Bank of Montreal. However, in my last 5 years, I was a mortgage specialist there too. So I've done various roles in the bank. I have a CFP with a financial planning background. I used to be a financial planner. Then I loved lending. So then I started specializing in lending. So I come with a lot of experience and a diversified background. So my job is not here to just go and tell them take a mortgage and that's it. I actually do more than that. I actually educate a lot of the client, tell them different scenarios. Because if a deal was a simple deal, anybody can do the deal. Okay, if a deal is simple, straightforward, you qualify. I wish I can have a lot of deals like that, which are slam dunk deals. But there are certain deals in which your experience plays an important role. And that is where I take pride in the experience I have in my business. Because when you have a lot of experience, I have already dealt with very complex deals, very not straightforward deals. But the experience, how it helps me is to structure the deal in a way and guide the client and educate that, okay, this is your challenge. The deal could be done this way. As long as the client is on board with you and they're okay with that, we can always structure the deal in a way which is okay from the bank perspective to get an approval on. So this is where education and experience comes, right? So, I mean, it is not like a piece of stone that you sell. Same thing applies in your field. We are all in sales, right? So experience adds to your value that you already provide the client. And I work very closely with a lot of real estate offices. I go out, this is a good time, it's a slow period. I know for you, for me. So as Bob was mentioning, I'm sowing the seeds right now. So I'm out there. Visibility is very important in our business. We do a lot of presentations, talk about a lot of programs. I get a lot of phone calls throughout the day from real estate agents. What they do is they normally discuss the case, and Junaid knows that. Junaid is very professional and very thorough, and he has developed a very good process with me. So what he does is he first discusses the case on the phone, that this is the situation about the client. And for that, you have to know your client very well, right? So you understand their case, you discuss the case with me. And then when I see, okay, that is the process, he will then introduce introduction through email and copy me on the email with the client saying that Nonica is a partner with me from National Bank and she holds a lot of experience. So I will introduce you to Nonica to sit with her and do a pre-approval process. So we go through I do a video Microsoft Teams call with the clients. We go through a preliminary calculation process whereby I know that what are the strengths of this client, how much maximum they can qualify. And then I will keep Junaid in the loop that Junaid, if you are showing the properties, this is the maximum purchase price they can work with. This is the maximum mortgage they can get. This way, even Junaid is more prepared as to what type of properties to show, because you want to optimize your time. You don't want to waste running in circles, because time is money for everybody, right? So once everything is good, then once there is an offer, then we work on it. And National Bank turnaround time is very good. Within 2 business days, we get an approval. Sometimes the client is very good. The deal is auto-approved by the system within 24 hours. So it depends from client to client. When there are exceptions required, usually it will take 3 to 4 business days, but normally the maximum turnaround time is 48 hours. Okay, so we are very good on the delivery time, turnaround times. And then, and I'm just a phone call away. So the best way to reach me fast is by email, through text message, through WhatsApp. You know, if I'm busy, I'll just say I'm busy, but I'll call you back right away. But most of the time, if there is a pressing need and urgent, please just pick the phone and call me or text me. Do you have any questions for me? I will introduce you Iris. Iris is new on board, but I know her from before because she was under the National Bank brokerage division of National Bank from the investment channel, but she's our new boss, Iris. You're my boss.
My name is Iris. I just joined this new role since November 1st. So if you have any questions, she's the expert. I came from investments, so I'm still learning, but nice to meet you all. Thank you for having us today. And I love the energy here. I love Nonica's presentation, loud and firm. She got everybody engaged. So I absolutely love that. Thank you, everybody.
We're-
Do you normally ask, or when do you ask for liquidity? Or do you simply go by liquidity?
Okay, so the National Bank process of approval is this. I let the clients know, I usually send clients a document checklist. In my document checklist, the client will attach all the documents and send it to me in the email. After receiving the documents, I submit the deal right away. So 24 hours, within 24 hours of document receiving, the client will have a decision, approved or not approved, right? After the approval is done is when we find out whether the appraisal is required or not. We cannot find that out without the approval. So appraisal condition is generated after the mortgage is approved. As I said, for most of the pre-constructions under $1 million, most of the time Emily waives the appraisal fee. But right now, for external refinances, so let's say somebody has a mortgage at TD or RBC, and they're bringing mortgage to National Bank, we absorb the appraisal fee. We are right now absorbing the appraisal fee. But for purchases, we are not. This is for external refinances. That is when we know, actually after the approval. So, to answer your question.
And I would be lately that the appraisals are required for just resale purchases, or would you guys?
Over $1 million, yes. Most of the property whose market value is more than 1 million, yes, appraisal is required. Yeah.
Thank you.
Luckily, we don't have bidding wars right now, right? But I think for the last 2-3 years, I have seen there's a lot of multiple offers and bidding wars happening. Make sure you let the client know, because I do the risk of appraisal not coming to the value they offered. And make sure that the client has that extra money sitting for their down payment, because that's a very big risk. I have in the high peak time of the market, seeing the appraisal values coming down by $300,000 to $400,000. That's a lot of money, because in Oakville, in some nice neighborhoods, the multiple offer prices were like $300,000-400,000 more than the listed price. And sometimes, it depends from buyer to buyer. Some people, they have a lot of money, they don't care. But there are a lot of people who just have limited down payment. For them, it is a big concern. So I think it is very important from realtor perspective, from a mortgage specialist perspective, to educate the client that you may run into a situation. So what is your backup plan if the appraisal value comes low? So it is very important for that. Okay?
Thank you.
Yeah.